Okie dokie traders, what's going on? Jamie Saettele here. It is May 24th, 2018, and let me know that you can hear and see. We have had the last couple of weeks, we've had some problems with internet over here on my end, so we've cut out a little bit a few times here and there. Obviously hoping it doesn't happen, but just a heads up, and if it does, apologies in advance. I'm going to start actually with this is the long-term page. I haven't updated the long-term page in a while because frankly, I haven't really had super strong opinions to post on it, but this is like as long-term as it gets, I guess. And it's something I don't want to forget. Talking with someone yesterday, so I trade for a hedge fund as well, and you know, one of the biggest things that we follow, of course, is just the dollar, right? General direction of the dollar. And the long-term cycles here, it's easy to get lost in the even month-to-month movements for that matter. But on a yearly basis, let's not forget that, you know, since the end of Bretton Woods, we've had these cycles that have pretty much been 9 to 7 year cycles. And, you know, I mean, 9 years, 7 years, 7, 9, 7, 9. That to me puts us in year 2 of a new cycle. That would be down in the dollar. So it's, you know, the context of that, obviously looking at where we are now in the dollar, we all know we're at major resistance. We kind of have been for 2 weeks or so. But something else that I thought was interesting, if we look at, remember we've done this before, but if you look at the comparison of the 1992 rally cycle to 2000, right? We call this the Clinton dollar rally, right? So Democrat, and then Republican, and then Obama, and then Trump, right? Well, if we zoom in, there are certain inflection points that are like spot on within the cycle, right? And you can see here, I've got some of them lined up. Not all of them, of course. Like this one would be an inversion, but that's keep that in your mind, inversion. So within along the time series, the comparison of the two data sets, you do get these points where we've seen what I would call inversion points, right? So like where in the 92 to 2000 comparison where it says you should get a high, we actually got a low, right? Now the final high actually matched up pretty well. But we had another such inversion over here. This was actually in August of last year where the 92 period, it said we were going to get a high. Well, we got pretty close to a low, right? Same thing actually happened in, well, actually this would have been in January. The lows actually matched up pretty well. And now we're at a point where we could be going back into some sort of inversion type of thing. And if it turned over now, it would be inversion. If we turned over and then went higher for a little bit in June, you'd actually be back on track with the exact comparison, which I think is pretty interesting to note. So this is just something that, again, history does not always repeat perfectly, of course. Otherwise, this would be really, really easy to trade and make money. You'd literally have a map of the exact future. That just does not exist. But I think there's enough evidence here that it's worth kind of knowing, keeping in your mind, and not dismissing. Okay, so I wanted to just bring that forth. Maybe I'll publish this in the update later or something so that you guys can have the chart and you can go look at it for yourself as well. All right, so we have that little interesting tidbit of fun information. And if we then look at, of course, the dollar charts, right? Just a reminder, we've hit some big resistance, right? 25 or 75 line high in US dollar right now is 12,000 on the nose, and that's pretty much the level we were looking at. You have the 3-year average a little higher, okay? You've got the low from the election in November of 2016 at 12,011. But the parallels have been hit, right? This parallel from the underside, that's been hit. This parallel on the downside, the bearish parallel, that's been hit. We're going to come back to this chart in a little bit, but DXY as well, right? I mean, a pretty perfect. They're not going to see as big a reaction here, right? Because this is mostly euro, and the euro's kind of been a weakling, to say the least, of late. So, you know, you're not going to get the move, say, in US dollar, right? That we have a big kind of a key reversal week. We've gotten that. That's going to be the big mover there because Aussie hasn't done a whole lot, pound hasn't done a whole lot, and euro hasn't done a whole lot. But that's going to be, you know, you're going to see that in US dollar, not DXY, with the influence of the yen. But again, here we've come into a big level, right? High here so far, 94.19. I actually think we had 94.08 to 94.20 as a kind of a cited resistance zone, and we've hit it. Okay, so for me, I kind of am a, you know, got to be a seller of the dollar into this resistance. It's that simple. Now, if we look at especially US dollar, the one with yen in it, and Aussie, this to me is one that we need to concentrate on moving forward, because the question is, you know, what is this move from the lows down here, right? Is this an A and then a big B? So like this would be A and then you have triangle B, right? A, B, C, D, E, triangle B, and then you got the big C wave on the upside, right? So is this done as a correction, or is this coming pullback, whatever it is that's happening right now? Is it going to be a fourth wave? Okay, we don't know that answer right now, and I don't presume, you know, that I have a strong feeling one way or the other. The most important thing that we need to know, and that we do know, is that we have, you know, entered resistance and we've come off of resistance, right? And it was an arduous process, right? You went up to 12,000 actually on the 21st. I guess that was Monday. And then you went up there again yesterday, right? And then after Fed minutes, we started to come off again. This is most Japanese yen. So for me, the levels that we want to be aware of as we come off, as this dollar move comes off, is really the median line, right? We're looking at a 4-hour chart here, by the way, but is really the median line, okay? And so that's going to be, you know, if we get down there tomorrow, it's going to be basically 11,900. Obviously, if you get there next week, it's going to be a couple ticks higher. But to me, I would kind of mark down that 11,900 area as one to be aware of, right, on the downside here in US dollar. You know, if we get into there, probably going to see some sort of a bounce attempt, I would guess. Is it too early to draw something on the downside here yet? Let's go to a 60-minute chart. Actually, we've come into the 200 period average on the hourly chart, so that itself is something to be aware of. But if we can get here, let's see if we get anything. Could have something to work with. I wouldn't really follow this quite yet. because you haven't hit the center line, right? Kind of being specific about that, but it is important. You haven't done it yet, so not enough information here for me to follow this just yet. But the big takeaway is that 11,900 in US dollars probably where you want to pay attention. And also, let's not forget the symmetry concept, right? This symmetry concept is quite powerful when it comes to median line analysis. Just here's the long-term example, right? 75 line, rally, hit 25 line. Well, on the way up, we've been riding on the 75 line. Now, granted, we've been pushing a show of strength, but that would put your 25 line down here somewhere. And that's probably even a better level to know as we go into June. That's going to be about 11,850. So the two levels to know on the downside for US dollar are going to be 11,900 and roughly 11,850. Okay. 11,850, by the way, is another parallel on the downtrend. And this is simply, I guess you could call it I don't know, this is going to be, we call this the 25 line and the 75 line. I guess you could call this the 37.5 line, if that makes any sense. But either way, these are levels to know, right? And you can see that we've hit those. It's actually kind of support down here on the way up. So those are the levels that we're going to know and we're going to be aware of as we head into the end of this month and the long holiday weekend and go into a new month, go into June. All right. So we've got the dollar at major resistance. We've kind of known that for 2 weeks or so, although it was really hit, I guess, this week. And we've got levels that we need to pay attention to on the downside. All right, so let's move into the major currencies. All right, so Euro. So yesterday I tweeted out something about the Euro. I think I called it, what do I call it, garbage or something, or a dumpster fire. I don't know what I called it. I called it something, a disaster. I don't know what I called it, but either way, I said, when I start calling something a name, like, you kind of feel that you're maybe on or at a level, some sort of sentiment extreme. My problem here with the Euro is that other than, yes, you do have these lows. Okay, this is from back in December. And if you scroll, we hit, this is the 2015 high, that's 117.12. So, we're in the vicinity of what I would call major horizontal support. I just don't have anything down here. We broke this level, that would have been yesterday. I don't have anything here on really a slope basis, and I prefer to have something on an angle or a slope basis, to kind of give me the go ahead to say this is a long, or we should be trying to buy this right here. So I'm kind of stuck, in a period of indecision with Euro at this point in time, and the Euro itself is stuck at a period of indecision. So, look, from a sentiment standpoint, certainly it's kind of extreme. The DSI numbers, the daily sentiment index numbers, were like 7 last week. I haven't seen this week, but it's probably down there as well. And from a horizontal basis, we obviously have the major levels that we just talked about, 2015 high, all that stuff. I just don't have a major chart level for Euro, like a level that I'd be like, all right, this is it. We got to buy it now, or it's, or it's toast, until like down here. And that's going to be the November low at 1550, right? That's the trend line off of the 2017 lows, January and April. And then finally you have your next parallel from the longer term slope right here as well. So, yeah, for me, it's kind of wait and see. Pooja says, where do you check the DSI numbers? Is there a place we can take a look? I don't check them because it's a subscription-based service. I don't pay for it. I mean, it's pretty expensive. I know some people, like some trader friends of mine, you know, every once in a while they'll shoot me a message and say, hey, guess what, Euro's at this, or, you know, sugar wheats at this, or whatever. So I don't actually get those numbers. If I did, I'd share them with you all the time, right? But I don't get it. There is the website to go to if you want to check it out is I think it's trade-futures.com. Okay. It's an interesting tidbit of information. It's short-term sentiment. But again, once it gets down, you know, below 10 or above 90, it's kind of worth taking a look and knowing, you know, where you might be in that market. But so I look at Euro. Here are the levels that we need to know, need to pay attention to. Like I said, if we can get off the ground here and get back above, I'd say 1780, which is this confluence right here, okay, then I would say maybe there's something to be done. Maybe it's worth a shot on the upside, but it does seem kind of like a force, like a fight here with Euro. Again, the downside level, the next have to buy it, is probably going to be 15, you know, 50, 1560 area down here. You know, if you get down there, especially if it's in the next couple of trading days, I would say that we're probably in peak panic at that point, because that's a pretty far drop from here. And oh yeah, you get the idea. Anyway, though, my wave count suggestion, if you will, it's much like we just said with US dollar itself. So like, is this A and then B and then 1, 2, 3, 4, 5 for C? Or is this a 1, 2, 3, and then are we entering a fourth wave rally? So either way, I feel like we're due for a rally on a wave count standpoint. It's just tough for me to be a buyer right here, again, because I don't have that slope angle, that level that makes me really comfortable doing it, okay? I will say that if we can short-term, you know, constructive activity, I guess you could say today, which is not over, but could be a start, given that we're making an inside bar. By definition, we've stopped going down, at least for a little bit. Then I'd be looking up towards 1960 or so, which is the underside of the corrective line, the former corrective channel. And that's going to be, you know, that was basically resistance. We missed it by a couple ticks, but back on 514. All right. You could, I suppose, as well, draw in something like this. Right, and have just a standard fork, in which case you'd actually be tagging down here on the 75 line at this point, and your natural level to look towards, right, on the 25 line. But that to me is not as clean as the way that we have it drawn now, which is just the corrective channel with the parallel extensions on them, right? The half extension and the full extension, which have served pretty well as far as inflection points are concerned. So Euro, not a whole lot to do just yet. That can change quickly, right? If we can get a move up through here and back above what I would consider, you know, an important slope confluence, then I'd say let's try to do something with that. All right, let's move to cable. Really, it's kind of similar to Euro in that it's not doing a whole lot right here. But we have hit, again, what I would consider a pretty big support level. So it's different from Euro in that respect, because I don't really have Euro at a big support level. So here's your channel from the 2017 low. Again, I consider this the low, not the flash crash from October of 2016. see if there's a fib or anything over here. There's really not. The 38.2 is here. Other than that, we don't have a fib here. But you do have the 25 line of this parallel. So that's been hit. Okay. You've got the lower parallel from this bearish fork. You could make the argument that maybe you want to nick out that and make a Friday low and then reverse. I'm not quite sure. But you've also got the trend line off of the highs from back in January. And if we zoom into that, it's really quite well defined. Very good resistance on the way down, was then support, and it just nailed it yesterday. Okay, and then if we zoom into the pattern even more, just count from up here from 36.15. That was the move right into BOE last week, right? You can count 5 waves down from there: 1, 2, 3, 4, 5, right? So when I look at this, I say, well, you probably got resistance up here, right? 34.99 is the year open. That's also a parallel level, a confluence of sorts. Buying it right here is probably more of a gamble than necessarily a trade, although I'm not saying, it's different for everybody. I am looking higher from here given the support that we are on and that we've hit, right? Just not in it at the moment. I think there's been better ways to play this dollar decline, which we've done mainly through yen and Swiss. But if we were to get a move up here, get up through or into this resistance and then get a pullback, then I think it'd be considered a buying opportunity. You could envision us making some sort of a low here or something like that, right? But as it is right now, I'm not involved here with cable. Of course, we'll let you know as soon as I see something that's worth doing, if there's something worth doing. Okay, let's actually go to dollar Swiss next. Euro yen chart. Okay, so here is dollar Swiss franc. So got good resistance here. What do we got here? Linear. Yeah. We had good resistance. This channel on the way up from the February low, kind of an unorthodox channel because it's extended out to this level here, but that did hit the highs. It's kind of been a rolling over process, right? And as it is now, trying to make our way in dollar Swiss. I'm still looking for this 98, 30, 98.50 area down here. That's going to be not just the trend line from back, from the February lows, April lows and all that. So I guess it's February, March, and then very close to April lows, but it's also the top side of the 2017 trend line. So here's the daily chart of that. You can see that's the trend line I'm talking about right there. So that just looks like a big energy point to me. I have January high at 98.45 is right there, right? So that's why we're looking for that 98.50 on dollar Swiss. You can see that we've come into the monthly opening price here the last 2 days, hoping that we can get maybe extension on the downside on Friday, maybe into next week. Either way, this could be setting up for something much bigger, which is why I would prefer to keep a piece of it, assuming it works out and we don't just go north again. And a couple reasons for that. One is actually the COT picture. So silver, Swiss francs, I can tell where my head's at. Swiss francs Blue line are commercials. Red line are speculators. Okay, largest spec short, largest commercial long, and then they're combined with the below indicator. But this is the largest positioning difference. I would call the most extreme ownership profile that we've had in Swiss francs since 2007. Okay, so you can see times since then when we've been more extreme would be right here. Okay, and again, this is Swiss francs, not dollar Swiss, so you kind of have to flip it around, and right here. Both of those saw really big lows, were, processes into a bottom, which would have been, Swiss franc bottom, dollar Swiss top. Either way, we've got that tidbit of information on our side. You've also got the fact that you've seen extreme 4-week selling in Swiss francs. So again, this is the relative position, right? We're looking at this now, not just from an absolute position, but we're looking at what's happened recently. In other words, have they capitulated? Have people just been tripping over themselves to sell Swiss francs? And the answer is yes. Okay, so times when they've sold this much Swiss francs, probably not the greatest tidbit of information. You do have some clusters on lows, but there are others that just are not, right? Sometimes you get some commodities or markets where the capitulation type analysis works really well. With Swiss francs, I would say it's not necessarily the case, at least not here, not yet, right? If you got something down here, right? So like if we had like double this amount, like back to the 07 levels, then maybe it's a little bit different. Then there's also the seasonal aspect of Swiss francs. Dollar Swiss, you can see where we are right here. 30-year seasonals top last week. Shorter term seasonals like 5-year, 10-year, 20-year the last 2 weeks and this week. So we are entering a period, of kind of Swiss franc strength, dollar Swiss weakness on the seasonal charts as well. Add that all up. Obviously, the most important thing in the world here is price, but add that all up, and we got a good entry. So let's see if we can, hit one here. All right. How about dollar yen? So dollar yen. The former channel on the upside worked out pretty well yesterday. I guess maybe was a little, I don't know, not frightening, but what's the word? A little indecision going into the minutes. But I mean, it was just too good a setup to pass up. And we've now hit the first target. And this is the center line of the larger fork. Okay. This is the center line of the larger fork. We could bounce here. You could see a decent bounce. I want to keep. I don't want to lose this position. The rest of this position, I want to keep it. Stop here. And the next downside levels are going to be 108.30, and then you're talking down near 107. 107.20, 32 is a horizontal level. That's going to be lower parallel. It's going to be 618 up of this move up. It's also the square root level of 107.32. Okay. So what to do from here? Well, for the time being, I want to do nothing. Obviously, we're at a support level right now, and I'm going to get rid of some of these things. Hold on. So we're at a support level right now. We've hit the median line on the nose, and there's a couple things that could happen here, okay? To state the obvious, you could rally off of this strongly. You could consolidate around it, or you could just flush through it. Now, more than likely, we're going to either see a strong rally off of it, or we're going to consolidate on it, right? Now, when you get the second thing I said, when you consolidate on a center line like this, and I consider this a very well-defined, very well-defined median line, right? There's a lot of things that happened here, right? There was a lot of resistance around this level. You had a big breakout through this level. In fact, this would be considered the opposite situation of what we're kind of looking at right now, right? If we get up to this and we consolidate on this for a day or two or whatever, then we have the possibility of median line acceleration, right? Of really zooming up through this and going to the next spot, which in this case is here, 108, roughly 108.40. All right, so it's just for right now, it's wait and see. Okay, you need to see what the market wants to do at this particular spot. I would consider 109.44 to be a level that we'd probably, could provide some resistance. You can see that was resistance actually back here in late April. And if we go down to an hourly chart, here's the hourly chart. Here's one thing that you may want to watch, right? We have a steep decline here, so you might not think that we have kind of the best, the best bearish slope to view, but let's consider the concept of original angle or original slope here. So if you draw a trend line just off of these highs, we can use the sliding parallel method, right? So if we do that and extend it off of, extend it off of the most recent high, which was yesterday's high, okay, right here, that's a level that should end up being resistance if we are still in a strong downtrend. I guess you could put it on here, but that might be asking a lot. In that case, you have a really strong downtrend. But these are the two things to watch, okay? I'm gonna put that there, and I might as well just put that there, why not? Let's see if dollar yen can cage itself in between these 2 points, make some sort of consolidation, and then puke on out to the downside again. That's what I would be looking for. All right. So at the moment, it's kind of observation time on dollar yen. But in this case, we're strong holders of a short because we had, we had two sides. So, we're out at 109.40 on the first piece, and it's okay. I'm okay holding the rest to see if this wants to do something a little more special, especially considering where we're coming from in the bigger, the bigger dollar picture, the big resistance and all that. And then, of course, there are other markets to consider here. The Nikkei and gold for that matter, which, of course, are going to move a good deal with Japanese yen a good deal of the time, not all the time, right? But in time to do. So we had the level, we were looking for 23,000 roughly for a top in the Nikkei. This process took a lot longer than I thought it would, but that's how it usually happens. And we've had a hell of a turn lower in the Nikkei. So at this point, we've actually broken down through the 200 period average on the 4-hour chart. This average tends to be pretty good in terms of support and resistance. So, the fact that we're below it, maybe we get one of these, come back up to it, consolidate around it, and then head lower. I don't know. We'll see. Either way, we've erased everything now since May started. So we are at a new low for the month today. And much like, dollar yen itself, we're going to see if we can consolidate around these levels and then go lower. So if we are truly in a strong bearish environment, I probably would not want to see the Nikkei. Certainly you could retrace this move and get back up to the average, but I'd be looking at 22 350, 20 as resistance. Top of that zone is the February 26 high. Bottom of that zone is the low from May 8th, and also pretty close to the high on 418, 419. So that's a level to know. All right, throw that in there as well. Without getting too cute on the short-term wave count, it does kind of look like you might need at least another drop after some consolidation here, right? If you just count from this high here, 523, at a 1-2, clearly a 3 with the emotional drop, probably doing something of a 4 right now, and then lower, and then maybe you get another bounce. Either way, the big takeaway from this is that we've hit massive, massive resistance. This is the daily you're looking at now. And, you know, I'm looking for something like this. I mean, this has been our kind of our comparison, the big drop, right? 3 waves up with a B wave low, 3 waves up with a B wave low. We're looking lower again. We're going to move to gold. I'll come back and look at some indices in a minute, although none of them are as interesting as the Nikkei because they really haven't been doing a whole lot, right? There's a lot of news out there. There's a lot of sharp intraday moves, but at the end of the day, since 514, really not a whole lot's happened, okay? So let's look at gold. Oh, that is a silver analog, which we'll look at as well. So the gold chart, we were good with this one. Got the flat, right? A, B, 5 waves down, C. Throw that bad boy right there. And I really want to believe that gold is finally turning the corner for something a little more chop fast. You know, it's still early, but levels to know. Call it 1320, but you know, 1319 here, 4-hour average or 200 period average on the 4-hour chart is up there. Obviously, if we can break through the, you know, the 2-4 channel line, that is going to be as good a sign as any that behavior in this market in gold has indeed changed. You know, it's got a good look to it with the way it's turned up here, but that's going to be your first test, right? So, you know, what I want to see is I'll look at it from a momentum perspective, and to tell us that we've really turned the corner, right? What we want to look at, what we want to see, is we want to see, you know, a strong overbought signal on this 4-hour chart, and then we want to see dips hold, you know, near 40. So think like when gold was coming off of the lows back, you know, 2017, right? Even in summer of last year, 2017, right? What happened? You get an overbought signal, markets come down, all these dips produce environments in RSI where it was above 40, right? That's a good sign. We don't want to get this chop fest where we have RSI going above, you know, over here, you're going above 70 and then below 30. We don't want that, right? We want this period here, right, where you go really overbought, and then you have a reaction which looks relatively minor on a price basis, but it corrects RSI down to the 40 period. So we'll be watching the behavior of RSI on this 4-hour chart to tell us if gold has really entered maybe a period where it can sustainably rally, right? You're not going to until you have the first real price reaction. And at this point, we're just now getting into overbought territory. So I want to see this extend. I'd love to see like a really overbought territory, like 80 or, you know, something bigger than that. And then see what it does when price reacts lower, see how RSI reacts, see if you can put, you know, some sort of a base in the indicator itself with the way the price behaves on the downside on a first reaction. So still a work in progress here as far as I'm concerned. when it comes to understanding whether or not gold has really turned the corner. But look, it's the pattern's there. You got an A, B up, 5 down, C. So it's a good way to start. Let's just we'll move to silver. I love the silver chart. I love the consolidation that you're seeing. Here's the silver futures chart. Let's just keep it simple. We've kind of been ridden this trend line. And really the horizontal level here is quite significant, right? Now, I did see, by the way, someone did tell me the other day that DSI on silver got down to like 10. I believe it was Monday. So the fact that it was down that low and you weren't even really in a broad-based decline, you were just in a sideways period, that actually is a pretty good signal, in my opinion, that silver, the risk is that silver really breaks out to the upside. But again, price is king, and we haven't broken out to the upside yet. So it needs to do that before I can say, this thing's going to do this. This is the analog. This is the comparison from the 1993 low. And, one of my old bosses likes to say, with a market like this, if this is going to happen, it's going to do it now, right? It's got to shit or get off the pot. Right? So it's got to happen now or get off the pot. So I think this is a real possibility. Otherwise, I wouldn't be showing it to you. We've been looking at this for a little while, maybe a month or so, 2 months, I'm not sure. But just understand that this is a possibility. You could see a silver rally just go parabolic of sorts into June, and then beyond. Why is this a real possibility? Well, because the consolidation is insanely tight, right, and insanely prolonged, right? And those kinds of consolidations, longer the consolidation, longer the base, the higher in space, right? So there's a lot of potential energy here. If we think of physics, a lot of potential energy. Let's see if we can make it kinetic. See if silver can do something. So those are interesting commodities to look at. We can look at crude as well. Let's see here. So crude oil. Remember, we had the ending diagonal from here. This was the crazy Trump day, Iranian, sanction day, whatever. For as bullish as it's felt up here, really haven't gone that far, right? I mean, we're at the same place we were on 5.7. So, crude oil could trap a lot of longs up here, man. This could get ugly in a hurry. Now, you're gonna say, how can you be bearish the dollar and maybe think that crude could fall apart too? Well, I'll just say that they've been going up together, so I guess they could go down together, right? Now, it's hard for me to believe the Canadian dollar would be rallying very well, so maybe a place to pair a trade would be CAD, right? We had a CAD yen chart last night. Looks pretty terrible on that for downside, so that might be something to look at if we do get some reactions on CAD yen. Yen crosses on the upside, look at CAD yen. But as it is now, we have major resistance here in crude. I think it's possible to still get one more high. So after a drop, so pay attention to. This is the center line of the channel. I have it drawn again from January 2016 because that's when the Brent low was. And if you remember this was just a very quick, type of move on the downside that was not confirmed by Brent. And, the center line's been really good. I mean, it was great resistance, right? Big acceleration through. Even support back here for the latest run on the upside. So if you count from here, 1, 2, 3, 4, 5, 6, 7, right? 8, 9. So what you want is 1, 2, and then this is 1, 2, 3, 4, 5, 3, 4, 1 more for 5. So that is my thought process at the moment. Okay, that would put support for crude probably down in the 68s somewhere, right? Just looking at it from the median line perspective, and then eventually eking out one more high. Okay, if I scroll out on this chart, you can see that we have already hit a major spot. And this, by the way, is more symmetry in median line analysis. So if you draw your channel from back on the 2008 high to the 2009 low, and use the 2013 high as your third point, guess what you get? You get perfect resistance, and then this is equidistant from here as it is to here. That's where the low was, right? So symmetry again is occurring here in in the median, within the channel or within the fork, whatever. Same exact thing is happening. So that's pretty important to know, that you've hit that spot. As it is now on a trading basis, I would simply be looking down towards the median line, 68 and change. So I'd kind of be willing to sell a little bit of rally if you get some strength up here around 71, 75. Okay, let's go to a couple more indices. I said I would go back and look at, the Dow, S&P, all that stuff. So the Dow, I'm not going to show the really long-term chart again, but you have it if you want to go see on the long-term page. It's still there. It's obviously valid. It's very long-term in nature. But these are the really long-term levels, charts, right, that I'm following. So we've kind of been stuck between these really long levels here for really all year, but they've worked like a gem. You've hit perfect support, perfect resistance, and now we're like over here somewhere. We've just been going like this. But looking at the Dow, levels that I would look at in the Dow here, frankly, it's probably the 200-day average again. That's kind of the top side of this trend line as well. That's going to be 24,000 or so. Below there, I think it gets a little hairy, but again, this whole pattern, it just doesn't work for me. And I've seen a lot of people talking about triangle breakouts and all this and that. Yes, you could say that we've broken from a triangle, but a lot of breakouts from triangles end up proving false and end up morphing into something else. Not to mention, this is kind of a steep downward sloping upper barrier, and those are often candidates for failure. So Kelly asked me about AlloCAD. Yeah, I will look at commodity currencies in just a sec, my friend. Don't you worry. So I would, just look at this chart. I say 24,000 is probably where you're going for a test, and then then kind of reassess or make a decision, or let the market make its decision at that point. But yeah, I would be looking lower from there. As I've said, the NASDAQ is actually probably the cleanest on the short-term levels. If we zoom into a 4-hour chart, right, we did come up on the NASDAQ. We did hit really good resistance on 514. So that was 10 days ago. And since then, we haven't gone anywhere, right? We had this chop fest of a, I was hoping to maybe get up here and then turn lower hard. It just hasn't happened. So there's several interpretations you could make here. You could say this is a and this is all a B wave, and we're going to spew lower in C. This could be a 1, this could be a 2. We just don't know. From a trading standpoint, I have some shorts on, and I'm just looking for 67, basically 67, 30 to 67.60. That's the same level I talked about, I think, earlier this week in a post. But that's simply the level to know on the NASDAQ, right? You get down into that region, and then again, let's see what the market wants to do at that point. It's a good drop from here. I mean, we're currently 69.10, so you can talk 150 points on the NASDAQ on the downside. It'd be a pretty good move in this environment, and so that's what I'm looking at. The big test for this market is 66.40. Okay, that's a pretty good horizontal level. It's also what I would consider kind of a new channel line. Broadly speaking, bigger picture, there's a bunch of different things that could be going on here. I'm not going to discuss them at the moment. I'll discuss them once we have clarity, I think, one way or the other, or reason to believe that one thing is happening and not the other. Until then, my focus is simply looking towards these levels. All right, and that is really it. So again, 67.36 to 67.65, you want to be specific, is where I'm looking. And you can see even within this short-term channel from the April low that you've got really decent action on the parallels within the channel. So this is the 75 line, right? Look at that resistance, resistance, resistance. Not quite resistance today, didn't quite get there, right? But that's another reason to look towards this level, because this is the 25 line, and guess what? That was support. And that's where we're looking. S&Ps. We've had two horizontal levels that we've been talking about for 10 days or so. And again, as mentioned, you haven't gone anywhere. So those horizontal levels are 27.59. Would have been a gem if we could have gotten up there, say, late last week for a top, but because it would have lined up with the channel. Did not happen. And then we're looking at 27.82, which is actually also the year opening price. And you've got just a very decent horizontal level there. A lot of reactions on that level, right? As you'd expect, because it's the year open. So those are the levels still that I'm paying attention to on the S&P. Real quickly, one thing that I would be aware of here. Let's see. All right, so the SPY chart here. Okay. So this is SPY, right? If you look at it on log scale, you've got a perfect trend line from, or sorry, this is not log scale, this is arithmetic scale. You have a perfect trend line from the low, and we've held those levels. I'm just saying, be aware of it, because if we do start to come off again and you get down here again, I have a really hard time believing that it's going to hold for essentially the fourth time. So that's bigger picture. It's just something to keep in the back of your mind. Okay, so I said I would go to some commodity currencies. Notice I didn't really talk about them initially because I don't have a whole lot to say. They're so quiet right now. Now, if I look at the, if I look at the bigger picture chart of, say, the Australian dollar, no, that's not a bigger picture chart, that's a 4-hour chart. If I look at a bigger picture chart of the Australian dollar, I can make a pretty good argument that hold on, I got to open up a new workspace. I can make a pretty good argument that we're at a great spot to rally from, but there's just really still a lot of decisions that need to be made from the Australian dollar. So that's the wrong workspace. Hold on, I'm sorry. Here we go. All right, so we look at Aussie, and here's that long-term chart, right? I love that we've hit this. I love that we've got, you know, kind of this doji candle 2 weeks ago, and we're holding the low. We've gone through the upside. So I do think that the Australian dollar is going to go and maybe try to test the underside of the trend line, which at this point is going to be up near 76.70. That to me is simply where I would be, you know, making a decision. So from here, I like it high. I like it higher. Again, there's been a lot better ways to play this dollar resistance, right? So don't get me wrong. You know, Aussie, I'm okay with on the long side at this point. Again, we're looking up here, 76.70. This is a short-term channel, 4-hour chart. It's acting, you know, it's acting okay, but nothing to write home about. And again, just better ways to play this at the moment. But again, this is what I would follow. If you're bent on trading the Australian dollar, it's okay, you know, to have a long bias here. Honestly, wouldn't want to see us probably below 75.20 at this point. We came in, we held support on the 4-hour chart. I want to see us just go right up to 76.70, and then frankly, it'd probably be a short-term sell at that point. Kiwi, we're long some Kiwi and have been for a couple of days, and just almost stopped out yesterday. The reason I like this, remember, we hit the full channel extension. Remember, this is the full channel extension, right where the low was. Yesterday's drop, we're holding daily reversal support. That's the close from the lowest day, and that's 68.98. We also have the long-term parallel and 50% of the entire rally from 2015 and a lot of inflection points around there, right? So I'm okay sitting with this one. Risk is pretty tight. You know, we're at long-term support and we're acting okay in the short term. And there is the COT thing with Kiwi at this point. So Kiwi could be quite sold out, all right? Unfortunately, my COT data on TradeStation only goes back to 2014, but the 4-week selling in Kiwi is the largest since that point. So you can see previous instances of extreme right there. That was the low from 2017, right there. That was before you had a pretty decent bounce of 3 weeks, right here, which would have been, I guess, nothing. So that would not have worked. And then right here, which also was in the middle of a downtrend and nothing. You also have one over here, though, before you went to the final run. Point being is that you got the combination of all this long-term support. You got, you know, this telling you that maybe people are capitulating on downside on New Zealand dollars. You know, it gives me reason to have something on the table. And you do have a short-term. No, this is not the short-term chart. Hold on. I have a short-term chart with Kiwi. It would probably be something like this. This is not going to be anything yet. But this is a short-term channel. And if you look at it, you have hit the center line of that channel, been yet last night. And since then, we've been consolidating between the 25 and the median line. So if we're going to get stopped out, it's fine. You could still drop to 68.90s again and then go higher, but I'm okay with this and, you know, looking for basically initially it would probably be up near 70. That would be the short-term channel level. But understanding that we are coming from a very long-term level, you could end up having a bigger base, you know, to work higher from. Okay, and now we got dollar CAD. So dollar CAD. When I look at this chart, I kind of think that it might be really bullish. Got a big thrust higher. and then all this tight consolidation between, by the way, parallels that go all the way back to 2012. So this is a trend line from 2012. You know it well. Been showing it a lot. Here it is. It's fine. And every drop continues to hold that line. So my thinking, just looking at this chart, is that you probably make a run for that 30-60 area, which is the trend line from the 2016 high, right? That's up here. If we look at it on a near-term basis, we've been trading between pretty good support and resistance levels. I would be looking at, this is now a shorter term channel just from the February low, but it does offer some risk points. So again, this is a confirmed channel, right? Going up into this level, pulling back, continuing to find support on the same spot. Look, your month open 28 is 28.40. It says 28.30 here, but that's messed up because it's chart. Frankly, let the day finish, and I would be, if we can finish firm or whatever, it's probably worth just trying, a long position with a 28.20 stop, perhaps, and looking for that 30-60 area that I just mentioned, which is going to be your longer term 2016 trend line. But I don't have a super strong opinion on dollar CAD at this level, Kelly. Not a great setup either way right here for me. That's just kind of how I'm seeing it, right? Like just looking at this and seeing how much it continues to hold this 2012 trend line tells me that it probably wants to try to make a run for the 2016 trend line, right? Yeah, I mean, it'll clear up at some point, right? Always does, and there'll be a great trade setup. In the meantime, I guess the thing to do would be to buy it every time it hits this trend line. But with crude oil potentially starting to come off, maybe that gives impetus for dollar CAD to finally get up and do something. Okay, that's it. I've gone a little bit over, so not going to do any questions today. Interesting moves here, with the going into the holiday weekend, seeing some risk off and whatnot. Obviously, my focus at this point, moving forward, is probably mostly on yen stuff, but generally leaning towards kind of dollar shorts with all the resistance that we've got up here. All right, so have a great rest of your week. Have a great Memorial Day if you celebrate it here in the U.S. If not, have a great weekend. And remember, 3-day or holiday weekend, so markets will be probably pretty quiet on Monday. But yeah, I will talk to you guys next week and enjoy. All right, bye.